This is Damon Stevens with Finwell Builders. Today is Thursday, June 30th, 2022. The stock market update for our trades of the day. It closed down a new low for this month, but we're coming into a new month here in July. So hopefully that'll bring some good things our way. But let's take a look at what happened today and see what we got from the trades and see what we can do for planning out the rest of this week. Just remember, Friday is a short day in the market, and also the market's closed on Monday for the US. So everybody have a great holiday out there. But let's get into planning day here and see what we need to do in preparation for tomorrow. So looking at the overall market, you can see that Dow Jones closed down 0.82%, NASDAQ down 1.33%, and S&P 500 down 0.88%. Pretty right across the board. Utilities did well, but other than that, our FANG stocks, money was flowing out. And so just something to keep in mind. Looking at our scanner here, nothing hit the scanner that we traded today. So we just stuck to the core stocks. Looking at our market watch here. So Friday, we have manufacturing numbers coming out at 9:45, and that's pretty much probably the only news for Friday. Don't know. I expect anything as far as the market to react to that, but just something to be aware of. Monday, obviously, we're closed. Tuesday, we have factory orders. Wednesday, I'm just looking through here. PMI final, so job openings. I don't see anything big. Maybe Thursday with initial jobless claims. Might have something next Thursday, and then non-farm payrolls on Friday. So maybe Thursday, Friday might have some volatility in it as well. But just looking to see, really, the plan is this market going to rally from here, or are we going to continue pulling back here? We are obviously in a downtrend and a very powerful one, and we closed out the month on that downtrend. So it'll be curious to see what July brings, but we will get you prepared and we will trade whatever comes our way. Looking at stock options, so puts and calls. Red is puts, green is calls. Obviously, you can see the put side is much more extensive. And one of the things that I noticed here today is, when I saw the market coming down today, I thought for sure everybody was going to be, probably cashing out their put options here, especially since you know what Friday's going to bring. But there's still quite a few options out there. Lots of them expire tomorrow, so just people be closing out positions. That'll create some volatility. Yeah, but they usually will do that probably in the morning, more likely. So just watch the morning for some volatility, and then probably the volume will start to dry out through the rest of the day tomorrow. And so it'll probably be slow as we get in the afternoon, and then obviously we close early. So just keep that in mind. But if the market did want to really hurt as many people, option traders as possible, we'd have a little rally tomorrow to 383. Don't have to do that. But if the market wanted to create maximum pain, then that's what it would do, is try to rally up tomorrow. But based on kind of where we're at right now, 377, we're kind of like right here towards this middle to lower area. So obviously those that are in puts are going to want to push the market down. The market's going to want to keep itself right here in the middle somewhere tomorrow. So this would be kind of the range, 370 up to this should be 390. It's not going to probably get to 390, but probably somewhere in this range. So I'd say between this 380 and this 375, more likely. So just something to keep in mind. Looking at live here, so S&P 500 E-mini live. You can see here that we are above the 20-day right now, 20-day moving average. We have this, we're also above this midline in our deviation band. So we're on the upper side of that deviation bands. That's positive. Possibly to get things rallying up here. You can see down here where this was our low today. So we came down here, bounced off that low, which is that lower deviation band, rode all the way back up to our upper deviation band, and then pulled back. And we're just kind of hovering around this middle part right here. But we did stay pretty much above the midline. So that's more of a positive outlook. Looking at, though, on a daily, you can see here we kind of close out the bottom of this candle. And we have a red candle started right here. just below it. So unless we get above this candle and start working our way up here, maybe by market open, we'll either be above this candle or somewhere in the middle of it. But if we break this candle to the downside, more likely we're coming down tomorrow. If we can get above this candle, then we could hopefully rally and close out this this week on a high note here. So Google, looking on daily, red candle here. We're on the lower part of our bands, and we closed on the low part of the candle. So that's more bearish for Google, and we have support down there at 21.20. Amazon closed again bottom of these candles, below these candles, and on bottom of this current candle. So obviously support would be around 102 area. Apple closed towards the upper part of the candle, but below these two candles, so that's still bearish. The candle's bullish, but where it closed is more of a bearish. Where this gap was. So if we can get above the 20-day and start to climb these candles, then the high would be 142. If we break down below this candle, then 132 would be the number on the list. Nvidia come down, hit 150 today, just amazing. So hit new lows on Nvidia. The stock really has just gotten beat up, and a great company. So right here, we almost tagged this trend line down here. So the question is do we come down further and we're going to break down and come lower, or since we have a new bottom in on Nvidia, do we start to rally off of here and pick up? So I'll be watching Nvidia to see if this is a bottom here, maybe Nvidia gives us a little bit of a rally. Meta, so you can see here we just continue slowly trickling down. We're at the bottom of this candle. We haven't closed below it, so that's good. Maybe we can kind of rally back up towards 170. But if we do break below this candle at 160, we're going to come down probably to 155, 154. Tesla showing a little weakness as well. It's below this candle, so unless it gets up above 700 tomorrow, which doesn't look like it is at this point because we're at the bottom of this wick now. So we've already kind of retraced this candle. So if we break below the 670 area, we're probably coming down to probably 630, maybe even 620 at the bottom of our trend line here. So just something to watch for tomorrow. If you haven't subscribed, please subscribe and also like our videos so we can continue bringing this content to you. Also check out finwealthlive.com, and there you can find a link to our Discord where we publish our numbers before the market opens. That way you know what we're trading and what numbers we're looking at, when we're getting in, when we're getting out. We also have a free training out there if you go to finwealthlive.com. So go check it out. There's a community out there, and we'd love to have you join us and make some money together. Looking at the dollar here, dollars continues to be elevated. So it's still hovering around and close to that 109, about halfway down this candle. So just kind of range bound right now on the dollar. Gold continues to trickle down. That's kind of at a support level now, this 1805. So if we can hold that, maybe we can rally up and somehow break through at some point. But right now, gold just continues to trickle down. U.S. oil still low on those lows, still in our lower deviation band. So just kind of monitor this. It probably become range bound, it looks like, for right now in this area. So this 182, it's got to break out of 82 or break below 78. The VIX, we did bounce off of the 100 here after a couple of days. We talked about that in our last videos. We also got bounced off the 50-day and so the 20-day. So we're right there now. Can we pull back down, or do we break back up and head up north? If we continue going up from here, more likely the market's going to continue coming down. We can get to where we can break through the 20 and the 50 and the 100 again. Then we can get a rally going as we get into this new month. SPY this 15-minute, you see right now we're below the 20-day moving average. So that's more bearish. We are above the midline, so that's bullish. So we're kind of in a decision point. So we really got to get above the 20-day, above this 378 area, so we can rally tomorrow. If not, and we get below 376, more likely we're coming back down to some lows. On our daily, you can see here kind of a indecision, right? Little doji candle. So so there's like candles above it that we could chase, but not much down below it. So it very well could fall down to this 362 area if we don't get some support here. So here's what SPY on the weekly. So we talked about this in our videos as well, as this chasing down this candle to the bottom of our deviation bands, and that's exactly what it did as we closed out this this last week here. So hopefully we can find, we do have 3 bars now, you know, above the 200 day. So that's good. We're also at the bottom of this candle though. So if we can hold our support here, like we were talking about before, you know, we can rally up here and possibly, you know, start to rally up and get off this this deviation band. If not, if we break below this deviation band, we maybe come back down to that 200 or lower. So just keep that in mind. On a monthly basis, see here's last month, here's this month. So we closed right below it. So we put a new low in this last month and we closed lower. So that's more bearish. That means we have possibly some ways to go down here. On the monthly chart, 340 would be the low here for the possibly for the next month. So just keep that in mind. Triple Qs, flat doji, second day. So pretty much, you know, indecision right now. So we got to look to see what happens. We have a gap to fill below, or we could stop rally up here. So market's kind of at a decision point at this point. Doji, so IWM again flat. So top part of the candle, but it's a small candle. So possibility to rally up, but right now, market's overall indecision. Financials, top of the candle as well. We're in this candle, so I do like this better. So maybe we can rally and travel up this candle towards its high, you know, around, you know, 32-30 area. If we break below this candle, then we could be coming back down to 30 area. Healthcare, just kind of consolidating. We're kind of stuck in this range here now. So we'll see. We got to get back really above 130 to break out, or below 127 to break down. Energy sector, indecision right here below our second deviation band. So really weak on the energy sector. Got to see if we can get back up here into this range to start to rally up here again. So energy is looking weak right now. Bitcoin still curling down below our support line. Well, it was our resistance line, now support line. Now we're back to resistance. So, you know, we're back below 20. So, you know, this could be a bad weekend again. You know, do we come back and revisit 18,000? It's possible. But we got to get back above 20,000 and hold it for a couple of days if we want to start to move back up. Same with Ethereum. Ethereum's looking weak. You know, we're headed down. So Ethereum very well could come back down to that 900 level unless we get things moving. So it could be a bad weekend for Ethereum as well. Keep those in mind. Stay safe out there. We'll bring more to you on Sunday night as we prepare for the new week. Actually, I take that back. It'll be Tuesday. It'll be Monday night for the video. Tuesday will be our day back in the ops and to the market. So keep that in mind. Everybody have a safe holiday weekend if you're in the U.S. and those outside also have a safe weekend. And we will see you all on Monday night as we prep for Tuesday. Everybody have a great weekend. Good night.